16 years ago, I was a university student trying a bunch of trading strategies to see if I could grow a small trading account. My first taste of trading success came when I took a $1,000 trading account and turned it into $7,500. But instead of paying off my student loans, I blew the entire account. Luckily, fast forward to now, I can have $20,000 to $25,000 trading profit weeks, withdrawing returns from my brokers on a regular basis. Now, in the last week, I decided to go back 16 years and took a small $100 account, trading it to $549. Now, this is not a typical result, and I'm not promising or guaranteeing that you can do this yourself. I just want to show you my exact trading strategy that I used to grow this small trading account, the risks I took, show you the tools and indicators that I use, then show you every live trade that I placed in the hopes that it helps you even if you're a beginner. So smash the like button and let's dive in. Okay, here are my live trading results for the week. You can see here, this is a verified track record, verified trading privileges on a live account. I deposited $100, I profited $449, for an absolute gain of 449%, an absolutely incredible looking equity curve here, but this is not a ploy or a get-rich-quick scheme. There is potential of losing money here. I was risking anywhere from 15 to 30% on every single trade. Now, if I were trading on a $300,000 account, I'm never going to be risking 30% on a single trading position. It's just too much money. But with a smaller trading account, I can take bigger risks, try and scale it faster, and then pull back on that risk when the account gets larger. One of the trades here gained 44% in just 32 minutes, which is obviously risky. But I believe in my trading process to mitigate these risks and give me the edge I need to be consistently profitable. So let's go through that entire process now, starting with my trading strategy. This is step one in my trading strategy. The first thing I'm doing every day, whether I'm on a small trading account or one of my bigger personal accounts, is I'm setting up my trading range for Forex, indices, gold, everything that I trade. You could see it's a 15-minute candle, and this candle is going up, it's going down, and it's setting my trading range for the day. This is happening at 9:30 a.m. Eastern, and as that candle closes right there, you can see I just mark up the top and I mark up the bottom, creating our range high and our range low for the day. I'm using this as trade direction. Then I just come down to the 5-minute time frame, and I'm simply watching the 5-minute candles here to see if we can get a break and close of that range. You can see on this first candle right here, we got the broke, but we didn't close, right? We rejected and we ended up getting the close right here back inside the range. What we want is we want the candle to break and close outside of the range, whether that's on the top or the bottom, with this candle right here breaking and closing above the range. That's just telling us we're going to want to buy on this asset today if the rest of our rules are met. So as I continue to play this out a little bit here, you can see price is continuing to push up, right? It's just continuing to push up, 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 up. And this is a good sign because what we want to see, the next thing I'm really looking to see is that break of structure. So you can see right here, we take out that high with price breaking above that high right there. Another indication that we really want to buy today. Now let's quickly play the rest of this trade out. You could see it taps in. Why did it tap in? I'll tell you in a second. And then price struggles a little bit before smashing the take profit. This takes us to our second step, entering our trading positions when growing a small trading account. Now, there's many ways traders use the orb trading strategy to enter trades. Some people get the close out of the range and they simply go long right there. I know it seems simple. That actually does work pretty well, but I'm always going for a higher win rate. Like you can see here in my Trader Edge backtest, I have a 67.68% win rate backtesting this current trading strategy. And when I'm really picky, I can actually get that number even higher. Okay, let's get back to those entries though. You can see other traders, what they'll do is they'll wait for the break and then they'll enter on a retest right there. going long just like this. And another really common entry model I'm seeing lately is the break, the rejection, entering back into the range, and then taking a sell on the retest to the downside. I'm seeing some traders having luck with this one as well. And obviously, I'll sometimes use these entries as well frequently on my live streams. Sometimes I'll wait for the price to come out and then come down to maybe a moving average and enter a long trade on that. But my favorite way, my A+ setup, is a supply and demand setup. So in order for us to get that right there, we need to have something that looks like this, okay? We get a big push out right there. That creates a level of demand at the base right here, because that's where the smart money was. That's where the big buyers were, the institutions that actually push the price up, right? Ideally, we get a break of structure like we have right here, and have some big fair value gaps in the candles on the way up, which is another indication that there's a lot of institutional money pushing the price up, and we want to trade with the institutions. Then you take the Fibonacci, you measure from the bottom to the top, swing it over like this, and we just want to be entering kind of below that 78.6. Anything below the 50% is our discounted zone, but generally we're getting a 100% retracement. Prices coming back to that level, entering my long position. I'm getting a better risk to reward than any of the other entries, and prices pushing up aggressively, smashing my take profit. Now that's just the basics. There's obviously way more that goes into every single live trade, which is why I'm going to take you right into the live trades right now to show you exactly how to do this. But before I do, if you're looking for a place to trade, I trade with the AAA FX broker. The link is in the video description. Registration is absolutely free. The spreads are low, commissions are low, and it's my favorite broker right now. All right, so let's get into those live trades and let's grow a small trading account fast. Now let's go through my live trades. This first trade right here, you can see I tapped in, price pushed up, and on this position I made 20 bucks, left a little profit on the table there since I was targeting this recent level of resistance. Then I had my second trade right here, which actually came to a level of resistance as well, and this time I didn't exit, so sadly it went against me and actually smashed my stop loss right there, losing me about 15 bucks. When price came to resistance right here, I probably should have took a partial profit and set my stops to break even. It would have been a winning trade, but I was a little bit too greedy. Now let's jump into trade 3 and get really in depth with my strategy on how to grow a small account fast. So it's 9:30 a.m. Eastern, New York Stock Exchange open. We have 1, 2, 3 candles. That creates the trading range, right? The top wick right here on the 5-minute time frame, that's our range high. The bottom wick right here on that first candle, that is our range low. Then we're waiting to see, does price break and close out the top? Yes, it absolutely does. And with 1, 2, 3, 4 green candles in a row, we also have our level of demand on the red candle before the big push up. That is our demand zone right there. We also have a fair value gap being created on this candle right here. That means this candle right here is not wicking in to fill any of this. And this candle right here is also not filling any of this, creating a fair value gap, which is a level of imbalance. That indicates to us that we have a strong level of demand. You can see on this trade, I also drew a trend line. I don't always draw trend lines, but you want to have a trend line with 1, 2, 3 touches at least, and then a break. And that's just an indication that price is starting to move in your direction. Now, obviously, this is a really big demand zone right here, so we have to figure out where we want to enter. I decided to put my entry at the bottom of the range right here because the bottom of the range, middle of the range, and top of the range can all be used as support and resistance. So I decided to use the demand zone at the bottom of the range so we have an extra level of support. Now, when the price is up here, I already set my limit order. So as soon as the price comes down to this level, it'll automatically trigger me into the trade whether I'm at the computer or not. And for my stop loss here, you could see I put my stop loss below yesterday's range low. If you scroll over here, you could see price actually broke out of this range yesterday as well. Then for my take profit, I just set it to at about 2%, so I'm risking 1% to gain 2%. And you can see the trade came to my level, tapped in, and immediately smashed my take profit. And sadly on this one, I actually left some profit on the table again. As we continue this one, you can see here it continued to go in my direction, higher and higher. So I could have made even more money on this trade, but I did manage to pull down $40. Now, before we go into my next A+ sell trade, take a look over here at my market watch. You can see all of the pairs and the assets that I trade: gold, oil, US 30, US 100, GU, EU, US CAD. And I also want to teach you how to install the indicator that I use. Just come over here, type opening range with breakouts and targets by Lux Algo. Click on that right there, and that's going to put these yellow lines on your chart. Just come to the settings right here, select time period 15 minutes, 9:30 to 9:45, UTC -4. Then come to the bottom right of your chart and just select -4. And if you do that, it doesn't matter where you live, the indicator will automatically set up the right range at the right time for you to use my strategy. Now, before I show you exactly how to do a sell trade, leave a comment telling me your favorite thing about the orb trading strategy, and I'll give my 3 favorite comments free access to my VIP trading room. Now, I'm on that 5-minute time frame again. I'm looking at 1, 2, 3 candles. Look, top of the wick right there, that's the top of our range. Bottom of the wick right here, that's the bottom of our range. Now we want to see that price break out the top or the bottom. Look, it broke out the bottom and it closed. So this time we're looking for sell trades. Now here you can see we have 1, 2, 3, 4, 5 red candles in a row, creating a huge impulsive move down and giving us a demand zone on the green candle before the push down, right? Now on this one, we have this huge supply again, but don't worry, I'll show you exactly where I enter the trade and how I enter the trade when we get an impulsive move that's this big. So let's just play this out a little bit more. You could see prices starting to come back to that level of supply. So this time I decided to go short at the range midline. I put my stop loss above the recent wicks over here, and then I targeted about 2% again. At this point, I already have my limit order there, so as soon as price comes here, it triggers me into the trade, and then we push down to take profit, hopefully. Now, to get my entry on this position, I did take the Fibonacci. I measure from the top of the move right here to the bottom of the move, and then I pull it over. Now, as you know, anything above this 50% here is discounted price, which is what we want, but I really like the 78.6%, and that just happens to coincide with our range midline right here, which can act as resistance as well. So that's the level I decided to use here. You can see price started pushing up, came to my entry about this level right here for a sniper entry right there. Let me adjust that a little bit here. My entry was a little bit lower right there, just like this. And you can see I smashed my take profit there for about $80. Now you might be wondering, why did I use the midline? Why didn't I use the top of the range as resistance? Well, because our impulsive move came down so far, I didn't expect the price to come all the way back to 100% retracement, and that was obviously a calculated decision that paid off on this trade. Now, moving into trade 5, it was very similar. I got in at that range midline again, and it worked very, very well. There was a little bit of resistance where I was at right here. You could see I almost hit take profit. I just wicked to the top. I didn't hit TP right there, but I ended up risking 30% on this and winning another $80 on this trading position. And trade 6 was very, very similar again. Tapped in, went in my direction almost immediately here and smashed my take profit, just wicked it right there and then came down. This one, we started to see some compounding growth and I won $139. Now I have one more trade to show you and it's my best setup yet. Okay, here we go. 5-minute time frame, 9:30, 9:35, 9:45. The top of the wick is the top of the range. The bottom of the wick is the bottom of the range. We're ready to trade the day. Let's see what happens. What price breaks out the top and closes, so we want to buy. And look what else we're getting. 1, 2, 3, 4, 5, 6, 7 green candles in a row. That creates a level of demand on the red candle before the big push up. That becomes our area of interest. We also have a big fair value gap right here, so that's something we want to watch, right? This candle right here doesn't fill it, so we have an area of imbalance there that wants to get filled. Let's continue to play this out and see exactly what happens. Look, price is starting to come down. Where am I going to enter the trading position? That's always the question. On this one, I decided to enter on that range midline again, put my stop loss just below the range right here, and target about 2% again, right? We reacted off of that level right there, so it's a pretty good target, right? Reacted off of here, and here. Price isn't always going to get all the way to the top, right? So I set my limit order right there. As soon as price taps that, I'm into the trade, and it also overlaps with this fair value gap, which is another good reason to enter the trade. I'm also checking my Fibonacci. You can see from the bottom here to the top here, that's the move. Anything below 50% is discounted price, and you can see our entry is very close to that 78.6, a number that I really like. So let's go ahead and see what happens. Price tapped into my level right there, went a little bit further. You can see it went a little bit further, so I could have entered a little bit lower here, but then you can see price did push up, so I still made the right decision, even though I could have entered a little bit lower, and then smash my take profit right there for $120. My last trade of growing a small Forex account fast. If you need any help with this, leave a comment, watch my live stream, consider joining my VIP trading room. We're always winning trades in there. Watch this video right here. Definitely watch this video right here, and I'll be back next week. Much love.